Are we buying the dip, or are we waiting for the dip to dip even further before dipping into our cash to buy more of the dip? That is the question. I'll give you the tip. I don't know what's going to happen with this dip. But anyway, there's a lot of volatility out there at the moment. And I guess what I find fascinating through years of watching people talk about investing and stock markets and things, I think Kiwis are, like these days, they're saying, oh, stocks are on sale, buy the dip. And we've got a bit more education around investing, whereas not that long ago, we probably wouldn't talk like that. Share platforms that we can access are more commonplace. Hundreds of thousands of people are using them. It wasn't that long ago, pre-2017, say, that people weren't doing that. So I think there's been a massive, in a 10-year window, not even that, really like a 7 or 8 year window, people learning a lot more about investing. And so we pick up these kind of throwaway comments like, oh, stocks are on sale, buy the dip, great time to buy even more when there's blood in the streets. I'll be greedy when others are fearful, fearful when others are greedy. And like I grew up reading all the same things and seeing them and whatnot. So like I see where people are coming from. But the other day I launched when I saw the markets dropping 5% on the back of these tariff announcements and whatnot. I put some more money into the overall S&P 500. There's the sayings, never bet against America, all that sort of stuff as well. And I had some cash sitting there, so I deployed it. And then I look to do a little bit more of that this week as well. But I really am, like this time, I'm in two minds. And one of those is that, oh yeah, okay, we're just going through a bit of a volatility patch and a bit of a dip. But the other part of my brain is like, oh, maybe we're in a very different world now. And I'm not suggesting I know the answer, but I'm definitely thinking more about this. Like going into the pandemic, when there was more money printing, I thought, okay, asset bubbles are going to get blown up. And we saw that, and then we've seen a bit of the pop in New Zealand, but we haven't really seen that in the States. But I guess we have started to see that this year. But I just wonder if, like going forward, I've read a lot of Ray Dalio's teachings, and there's sort of that, that school of thought that, maybe things start to decline and we're at the peak of the debt bubble and debt cycles and stuff, which you might want to go away and understand. And I just wonder, do we not have any growth for some time? And are we really going into a completely different world going forward where there's more and more volatility? And if you think, it wasn't that long ago everyone was saying, oh, you just need to get to the next lockdown and things will get back to normal. Oh, we just need to get to the other side of the pandemic, it'll be normal. Oh, we just need to get outside of inflation and things will go back to normal. Oh, we just need to get out of the recession and things will go back to normal. Oh, we just need to survive till 25. All of this shit. But in the meantime, like we're not addressing the fact that normality doesn't exist. It's the world's constantly changing. And now it's, I think for Kiwi people, it's like, oh, maybe we're now going into an international recession. And we spoke about this on a prior video, but that's sort of where I think maybe the world's going. And maybe we have more of this volatility and we have this oversimplification that we just continue to buy the dip and everything just smooths out and it gets better longer term, which, hey, like statistically and data points suggest that is what happens longer term, and looking at markets and zooming out and all of that sort of shit. But the more you zoom in on the zoomed out, you see that there are wild patches of swings and ups and downs and whatnot. So we've got to be thinking long term with this. But people aren't very good at thinking long term, are they? It's not something that we're very good at, and we've been trained to think more short term with the access to things that we can all now have now, whether it's like a vape in a pocket, and we don't even need to wait to go outside to have a bit of nicotine hit. We've all got coffee we can just dispense at our desk. We got porn on our phones. We got investing machines on our phones. Like all of the shit that wasn't that accessible, Uber Eats and just everything's like right there. And so we're teaching ourselves more about instant gratification rather than delayed gratification. So it's very hard for us to think longer term. And I do think I'm always bullish on the world and bullish on investing and bullish on markets and whatnot, because I'm bullish on humans overall, that they are very, very powerful, and they're more powerful than what they realize. And actually when the shit hits the fan, like in hard times, they figure out ways to get through, because we're actually very, very resilient. And I look at Auckland right now as I head in there, and it's like, fuck, someone built all of that. Someone had to have the kahunas to put the deal together, to hire the people, to pay the debt, to pay for the crane, to fight, like, to figure out how it's even done. That's how I train myself to be really prosperous, or think positively, and growth and prosperity over time, because I'm just blown away at how humans solve problems and what they're able to build. But anyway, back to the sort of the main bit there before we get on the tangent, is I'm still realistic to that maybe things just aren't what they used to be like, and maybe things do change. Maybe we do have tariffs, and maybe we've got capital gains taxes coming in New Zealand, and like these major framework changes. A lot of us in, say, our 30s, and especially you lot in your 20s, you're going to live through this and you're going to watch it play out. And you need to be mindful that just because what once happened has happened, and people will tell you that that then probably happens again, sometimes shit changes, and it does change, and we do have new taxes and new ways of doing things and different customer behavior and outlooks and things like that. So just be a little bit careful with the kind of oversimplification of sayings, you know, like buy the dip and they're on sale and whatnot. That stuff's all good and well, but like if your shares go down another 20% from here, how do you mentally and psychologically handle that? Are you still saying the same stuff? Like what if your mates come to you and be like, oh bro, you told me to buy the dip and I've lost another 20%. What the fuck were you talking about? So you gotta be really careful with some of these things that we parrot as well and tell other people, in case we don't understand their situation, or sort of, you know, really give them the context of what it is that you've learned and you're trying to pass on. And realistically, we're very immature as a nation of investors, and especially younger people, and we're all doing our best to learn more and understand this stuff, which I think is amazing. There's some amazing resources out there, but you know, we have to be mindful that these things can change, and they can change pretty quickly, and we always want to make sure we're making decisions based on our long term and what we can see coming up. You know, it's all sort of, if someone was wanting to use their money to buy a house in the near term and they need that money for a deposit, and they've got it all like invested in the stock market, and someone's saying, oh bro, just buy the dip, you'll be all good, buy the dip. And so they pour more cash into that, but then they erode another 10-20% of their deposit for their house. Then all of a sudden, you know, they're having a conversation going, oh, I can't buy that house anymore, what the hell happened? Or their partner might be like, what's the go here? And I think, you know, we probably should have a chat about you know, relationships and money and stuff as well, because I had a fascinating conversation last week with a couple who both look at money very differently. But anyway, you know, you just be careful the slogans and the oversimplification, the sayings and stuff, because if people haven't gone and done the learning that you might have done, if you then parrot those to other people, like they may not, even just shit like, oh, it's always a good time to buy a house. Like, you know, the best time to buy a house was yesterday, and if not, it's today. And just like shit like that. It doesn't encourage people to think and to go like, oh, what do you mean by that? Well, hey, you told me that in November 2021. I've lost 20% of my household value. I'm in negative equity. Oh, don't worry, zoom out. You know, it's all good. You don't, you know, but yeah, but I'm feeling anxious about it. I'm stressed about it and whatnot. So, yeah, I think the sayings and stuff are great to get people to the start line, but we've got to encourage people to learn more than just the cute slogans, because they can get people into trouble quite quickly when they don't really understand the full context. So anyway, my overall thesis is I'm bullish. I expect markets to recover long term. I'm still investing. I'm buying stocks every week. I'm investing. All of us KiwiSaver contributors are, and our employers are buying on our behalf as well. So that's epic. Hopefully when it bounces back, we get, you know, the double up, because we've got employee, employer, plus a little bit from the government. And compared to those people who don't invest at all and don't believe in it, well, you know, they're going to be left even further behind when these things do recover. Or, you know, maybe we get it wrong, and people that don't invest, maybe they've saved because they've kept their money in cash, etc. Like, who knows? We don't know what is actually coming out there, and nobody knows. But be mindful that you need to understand, like, you need to own the decisions that you're making, and I'm owning mine. And my two thoughts are, one, I continue to invest because it matches my strategy longer term. But secondly, I could see, I would be comfortable and would accept a drawdown of 20 to 30%. It would suck, but I've talked about this before. It wouldn't emotionally fuck with me too much. It would suck to look at that on paper, but maybe that's the world that we're in, and maybe the S&P 500 as an example is completely bubbled up and still overvalued, and it's got 20 or 30% to come back and regression to the mean, and then it starts to move up and to the right over time again, and it takes ages to recover that loss. I don't know, and I don't think anyone really knows. So be very careful as well of all these videos of people calling the bottom of the market and the top of the market and the bull and all this sort of shit. Just be reminded that even in New Zealand last year, all of the bank economists predicted 4, 5, 6, 7% increase in property in 2024. They all got it wrong. Property didn't move at all. So be very careful when you take for gospel what is going to happen, because the world's very different, and I don't think normal exists anymore, and we're seeing major structural changes, and we have to live through it and figure out how it's going to impact us. So hopefully that makes sense. Love to know your thoughts in the comments. Drop one below.